Good morning. This is Shauna with Disrupt Apps again, and this morning I'm doing an off-the-cuff video. Just got my coffee. I was checking the news headlines, and I saw something about how Trump just passed the Genius Act. And right now I'm talking into a mirrored screen, but let's see. So, looking here on the news, let me type in Genius Act, and then Trump signs Genius Act, crypto dollar this, crypto dollar that, and crypto this and crypto that, fighting US crypto law, So, you go on here on the mainstream news and you kind of like look at what they have to say, but I want to look at the text of what is actually in the act here on the Senate bill, and this is what I have to go by for what is actually out there, and cutting through all the spin and stuff like that. And I have a feeling that this is part of the whole crypto agenda, and this is like I've been saying in my other videos about crypto. Crypto is a failed experiment, and now it was never meant to be an asset class, and it was never meant to be managed by third parties. And if you read Nakamoto's white paper, he or she or they explicitly say that in the white paper. And now when you have government intervening, they're now acting like a third party, which basically has destroyed the whole intent of the crypto movement. So with that intro, let me go ahead and get into reading this stuff. This is straight from the government. This ain't some right-wing, left-wing, chicken wing party. This is just what I have found with the Genius Act. And I'm reading this as you're going to be reading it, and there's going to be a lot of legalese that we'll probably just skip through, but you've got the title here: to provide for the regulation of payment stablecoins. Right there, the crypto movement is dead. To provide for the regulation of payment stablecoins. Again, I'm going to go right again and again and again and again. I'm going to go to the white paper of Nakamoto. Let me go ahead and pull that up here. I can't type this morning. Nakamoto's white paper on crypto. Right here. I can't type, but whatever. And I did this in my read-through. It's the same thing, right? Let me blow it up a little bit. And again, commerce, the internet has relied exclusively on financial institutions. And let me see if I can find third party. That's the key to this again and again, third party. But the main benefits: a purely peer-to-peer version of electronic cash would allow online payments to be sent directly from one party to another without going through a financial institution. Okay, good. Digital signatures provide part of the solution, but the main benefits are lost if a trusted third party is still required to prevent double spending. And here we go again. Double spending was the whole point of crypto, not all this blockchain bullshit and meme coins and speculation asset class. The whole thing was built on double spending. And again, third party. Now let me go to the next mention of third party. What is needed is an electronic payment based on cryptographic proof instead of trust. The whole point of cryptocurrencies using cryptography was trust, proof of trust through using crypto without the need for a trusted third party. What this bill is doing is making the government a trusted third party as an oversight to regulate. The crypto movement is dead. I'm telling you, the crypto movement is dead. And I'm telling you the reason why Trump went crypto, he was against it. I'm telling you is because they want to put everybody on a blockchain bullshit UBI, eventually a UBI society when technological unemployment destroys this economy. But they want to push people to a cashless society. And it's not a conspiracy. It's happening right in front of your eyes. But again, I'm getting off on a tangent, and you can see how frustrated I am with this. But let's get back to the bill. To provide for the regulation of payment stablecoins and for other purposes. Okay, so let's find out what these other purposes. will be enacted by the Senate of House of Representatives of the U.S. American Congress as assembled. This act may be cited as guiding and establishing national innovation for U.S. stablecoins of 2025, or the Genius Act. Guiding and establishing national innovation. What is this innovation crap? Is this another fake innovation like I've been talking about? Oh, this is nice. Bank Secrecy Act. Secrecy. We don't like secrets, do we now? All you conspiracy-minded people out there. The Bank Secrecy Act means Section 21 of the FDIC Act, Chapter 2, Public Law, Chapter 2, United States Code. So we got to look at this crap and what is this stuff? Retentions of records by insured depository institutions. So, retention of records. So let's look here. Congress finds that adequate records maintained by insured depository institutions have a high degree of usefulness in criminal, tax, and regulatory investigations and proceedings, and that the threat possessed to the security of the nation on and after the terrorist attacks against 2001. Hey, look at that. Patriot Act. What? Oh, let's not. Oh, juicy. Juicy. Oh my gosh, this is so juicy. Microfilm. The purpose of this section is to require the maintenance of appropriate types of records by insured depository institutions of the United States, where such records have a high degree of usefulness in criminal, tax, or regulatory investigations or proceedings, recognizing that given the threat posed to the security of the nation. Oh, 3 lines in, look. It's all about the security of the nation. The Bank Secrecy Act. They're tying it in to this Genius Act. I'm reading this. This isn't conspiracy. I'm reading it right off the bill. Now let's see what this crap is. 12 USC 51, 1951. The Congress finds that certain records maintained by businesses engaged in the functions described in the Section 1953 have a high degree of usefulness in tax, criminal regulations, investigations. Oh, Subchapter 2, Chapter 53. Let's see what this is about. Monetary transactions. Buying obligations of the United States government. Government blockchain. Is that what it's going to be? Well, let's keep reading and find out. I'll post all these links in the link below so you can see here, but national money laundering, financial crime free. You know, they're going to guise this as like, oh, consumer protection. Don't give me this bullshit. So basically, we're going through these definitions. Board of Governors, and the Federal Reserve System. Oh, guess what? Who he doesn't like right now? Federal Reserve Chairman Powell, who he appointed, not Biden. Comptroller means a comptroller of the currency. Hey, there you go. Comptroller of the currency. Ding, 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 ding. Comptroller regulated entity, corporations, digital assets. Digital assets means any digital representation of value which is recorded on a cryptographically secured ledger. They're coming for your crypto. Again, digital asset. The term digital asset means any digital representation of value. So if you want to digitally represent a golf ball as a value and put it on a blockchain, guess what? Where this is going, the government can regulate that crypto-backed golf ball. This is ridiculous. This is stupid. Distributed ledger. If you know what these are, you understand. The term distributed ledger means technology where data is shared across a network that creates a public ledger of verified transactions or information among a network participants, and the data is linked using cryptography to maintain integrity of the public ledger and execute other functions. Okay, so this Genius Act is probably going to give blanket authority for anyone who runs their own crypto or anyone who does anything blockchain or is suspected of doing anything cryptocurrency. This is going to give the government to come in and crack down. Federal qualified non-bank payment stablecoin users. The term federal qualified non-bank stablecoin issuer means a non-bank entity who approved by the Federal Payment Stablecoin Regulator. Hello, Batman. What did we just get done talking about? Any two willing parties to transact directly with each other without the need for a trusted third party. Trusted third party. What's the government becoming? Federally qualified non-bank payment stablecoin issuer. The government's becoming the trusted third party. Crypto is dead. Crypto is dead. I'm telling you, you crypto tech bros, we had a good thing and you fucked it all up. Excuse my French. I shouldn't curse like that because I should be more polite on the internet. But this is so stupid. Institutional affiliated party with respect to permitted payment stablecoin issuers. Institution affiliated party means any director, office, employees, or person in control of or agent for the permitted payment stablecoin issuer. So they're wanting to basically do a stablecoin that's connected to a dollar. Well, can any crypto be considered a stablecoin? Because it's, what are you going to exchange a crypto for? Any cryptocurrency, any number of the infinite zoo of coins out there, what are you going to trade them for? Peanuts? Grass blades? Seashells? No, you people. You're going to trade it for money. Dollars. So they're going to use all this crap here to break in on crypto and take over crypto. And I'm telling you, crypto is going in a dark direction. You people won't listen to me because you're too busy making money off your meme coins. Insured depository institution. The term insured depository institution means an insured depository institution as defined in section of Federal Deposit Insurance Act. Here, let's see what this is. Some 12 USC 1813 code. Banks and banking. Federal Deposit Corporation. The term bank means any national bank, state bank, any federal bank issued branch. Includes any form savings association. And this is defining what a bank is. Credit, same thing with a credit union. Monetary value. The term monetary value means a national currency or deposit as defined under Section 3 of the FDIC Act. Denominations. National currency. The term national currency means a Federal Reserve note as used. Non-bank entity. Non-bank entity means a person that is not an insured depository institution or subsidiary of an insured depository institution. Non-bank entity. That can be anyone who's got the coding skills to create a cryptographic crypto coin or run a crypto exchange. Non-bank entity. We're going to look at this document and see what that means. So are non-bank entities, are crypto developers now going to be regulated? Are they going to be under scrutiny? Are they going to be under control of the government? Or is this going to be relegated to a quote-unquote stable coin? Payment stable coin means a digital asset that is or is designated to be as a means of payment or settlement. Oh, okay, so let's play word semantics. Payment stable coin. So what, is any coin out there going to become a stable coin now under the guise of law, under the color of law? How are they going to twist that? If you've dealt with the law and things like that, you know how they can twist the law to mean whatever it is and they want, and judges can render their opinion. The issuer of which is obligated to convert, redeem, repurchase, or a fixed amount of monetary value. Okay, monetary value. What was that defined as? Up here, Control F, monetary. I can't type. Monetary value. The term monetary value means national currency or deposit of the Federal Reserve. And then again, they can play fast and loose with these definitions. Okay, so I lost my place. Here we go. A representative able to maintain creates a reasonable expectation that it will maintain a stable value relative to the value of a fixed amount of monetary value. Okay, all right. That is not a national currency. A security issued by an investment company registered under the Investment Company Act. Okay, this is getting, how I told you in other videos that crypto has become just nothing more than an asset class that's now under a, that's now with ETFs, is now beholden to Wall Street. Well, let's look at this. Oh, registration of investment companies. Oh, so they're tying in crypto to the Wall Street market, which has already happened to a substantial degree, because you've got companies, mining companies, who are beholden to profits that have stocks on the stock market, and ETFs and all that crap with ETF coins, and I mean not ETF coins, but coins that are related to ETFs now. So this is going to be tying into investment companies. So you can see where they're going with this. You've seen the direction crypto's gone. It went from a bunch of geeks doing their own thing with a good idea that's now been utterly corrupted. And we're looking at this right now. Permitted payment stablecoin user. The permitted payment permitted payment stablecoin user means a subsidiary of an insured depository institution that has been approved to issue payment stablecoins under Section 5. Again, I'm going to harp on this because all you crypto bros and all you crypto sisters and all you crypto nuts, what I'm showing you up right here. Trusted third parties. The whole point of crypto is to get away from trusted third parties. Trusted third party. Trusted third party. Let me see if I can find the other ones here. This is so frustrating. You people, you crypto bros and crypto people, you screwed it up. Your greed ruined it. Goodness. A federal qualified non-bank payment stablecoin issuer that has been approved to issue payment stablecoins under Section 5, or a state qualified. A state, meaning Maine, Massachusetts, Iowa, Indiana, Texas, Arizona, California, Florida, Oregon, Washington, Nevada. Permitted payment stablecoin users. They're going to come and they're going to destroy any small person who wants to have their own little peer-to-peer system. They're coming for you. This is what this is doing. This is what this legislation is doing. Person means an individual, partnership, company, corporation, associated, incorporated, or unincorporated trust, estate, cooperative organization, or entity. So, look at what they're doing here. Look at what they're writing. Don't go on your right-wing podcaster and say, oh, this is this and that, and Joe Rogan and Tucker Carlson and whoever, all these other idiots. And don't go on the left-wing people and listen to what they have to say. And, oh, this is going to be good for the consumer and so people don't get ripped off. Don't listen to either branch of the left or right-wing propaganda. Look for yourself. This is why I'm doing what I'm doing, so people will read this shit for themselves. I know it's unladylike to curse like this, but goodness gracious. I'm telling you, they're leading us into a blockchain UBI dystopia. And this shit lays the groundwork for it. Primary Federal Payment Stablecoin Regulator. The term Primary Federal Payment Stablecoin Regulator means, with respect to an insured depository institution, other than insured credit union, So they're defining what a regulator is going to be. With respect to an insured credit union or subsidiary credit union, with respect to a federal qualified non-bank payment stablecoin issuer that is not a national bank, primary federal payment stablecoin regulators. What happened here, people? Going back to Nakamoto's white paper, trusted third party. Getting rid of trusted third parties is what the whole point of this whole damn thing was about. Now you're going to have Comptroller, the Board of Corporations, and the National Credit Union Administrators. And look what this administration done. They have set up their own regime to do what they're bidding. So Trump and his crypto bros, what do you think they're doing? They're setting the stage to make crypto bend the whole crypto movement to bend to their view, their agenda. I'm telling you, wake up, people. Registered public accounting firms means something of the Sarbanes-Oxley Act. So you got to come here and look what this crap means, and then you have to read through this crap. The term state means each of the several states, the District of Columbia, and each territory of the United States. Blanket control of crypto for this if it's done through a state. Guess what that means, people? State UBI, state universal basic income, state payments for unemployment. That's going to be blockchained. I'm telling you, listen up. State qualified payment stablecoin issuers. The term state qualified payment stablecoin issuer means that any entity that is legally established and approved by the Trump administration and all his cronies and all his judges, is legally established issuing payment stablecoins by a stablecoin regulator. Issue payment and stablecoins in compliance with the requirements in Section 4. What happened here? Again, I'm rubbing it in your face for a point. What happened to this? This isn't what Nakamoto wanted. Nakamoto said nothing in here about government regulating crypto. You can read the damn thing for yourself. What is wrong with you people? Wake up. Issues of payment and stablecoin in compliance with requirements in Section 4. I may have just double read that, but state regulated depository institution. Subsidiary of insured credit union. Okay. Limitations on who may issue a payment stablecoin. It shall be unlawful for any person other than permitted payment stablecoin issuers to issue payment stablecoin in the United States. Crypto is dead. The crypto that you've known it is dead. Telling you. Requirements for issuing payment stablecoins. Here we go. We're getting into the requirements. Again, rub it in your faces. Wake up. What happened here? The purely peer-to-peer version of electronic cashwood online payments. Purely peer-to-peer. Purely means from person to person, from node to node, from client to client. Not the fucking government getting in here and telling you what you can and can't do with your coins, with your technology. This is government overreach. And yeah, again, they're guising this up here with up in this crap here. Oh, this is for your safety. This is all the government and corruption. Well, we're looking at the most corrupt regime so far in American history. I'm getting on a tangent. I need to get a sip of coffee. Requirements for issuing payment stablecoins. Standards for the issuance of payment stablecoins. Permitted payment stablecoin issuers shall maintain reserves backing the issuer's payment stablecoins outstanding on at least one-to-one basis with reserves. Oh, so now we're going to play the whole thing that people hate about the Federal Reserve with you had to do reserve fractional banking and how that went to shit over the 100 years. You know, you had to have like 10 to 1 and 40 to 1, and now you don't. During COVID, you didn't have to have any money to back up the currency you issued. But hey, we're starting here. Maintain reserve backing issuers payments stablecoins outstanding on at least one-to-one basis with reserves comprising United States coins and currencies, including Federal Reserve notes. Guess what? They're tying it to the currency. Whatever the hell all this shit means, they're tying it into right here. Currency. Funds held as demand deposits or other deposit may be withdrawn upon a time. Insured depository institutions. So what? For what, 200 or 300 years, or we had the greenback and then we had a dollar, and then the Federal Reserve came along and then they mandated. You know, if you know your currency history, America used gold. We had silver. We had decentralized banking for like 100 years with regional banks issuing their own currencies. And then we had kind of went on a mono unified platform with the dollar, and then all those regional bank and bank notes disappeared. We went to this one singular dollar system. So I say that because we have it insured. The dollar has been insured with the FDIC and stuff like that. And so are they going to start doing the same shit with crypto coins? So you're going to have a Litecoin reserve, and then a Bitcoin reserve, and a Dogecoin reserve, and a fart coin of the week reserve. I mean, this is getting ridiculous. I'm reading this through as you are, so I had to figure this shit out. Like everyone else. So, standards for issuing of payment of stablecoins with currencies and Federal Reserve notes, Treasury Bills. So what are they going to do? Are we going to start blockchaining and cryptoing Treasury bill? I mean, what does this mean? Treasury bills and notes and bonds with 93 days or less, repurchase agreements, reverse repurchase of agreements, tri-party, collateralized by the US notes. Okay, reverse repurchase agreements with maturity of 70. So what are they going to start? I'm asking you as I'm reading through this. Are they going to start cryptoing all their treasury bills and reserve repurchase agreements? Money market funds invested solely in their underlying assets? Central bank deposit reserves? Publicly disclosed year's redemption policy, establish procedures, publish the monthly composition of the issuer's reserves on the website or issuer. So before we get into this, if you have all these crypto coins out there, is that just spitballing here, are they going to have to hold back cryptocurrencies like the exchanges or whoever hold these? Is if you mine your own coins, are you going to have to mine, and you're going to have to disclose to the government that you're mining coins, and that if you're a miner that you have to hold back a certain amount so the government can look at what you're doing and probably tax you? And this is absurd. I'm telling you, the crypto movement is dead. Prohibition on rehypothecation. I have no idea what the hell that means. So I'm ignorant. I will always admit my ignorance until I find out. Let's Google search this and figure out what the hell rehypothecation is. Is a practice where a lender, like a broker or a bank, uses collateral they receive from a borrower, I can't speak, to secure their own loans or obligations. Okay, let me read that again. Rehypothecation, so re means again, hypo means like center, like hypocenter. Thecation means to do. So it's recentralization. Rehypothecation is a practice where a lender, like a broker or bank, uses collateral they've received from a borrower to secure their own loans or obligations. Essentially, it is the repledging of collateral, allowing the lender to use the same asset multiple times to secure different transactions. What? Good. Prohibition on the okay, that's okay, I can get on board on that, but it depends on how it is used and how that can be abused. Because they did, if you lived through 2006 and 2007 and 8, you remember the whole collapse with what brain's fried right now, but you remember living through that era when the financial crisis happened due to the that whole lending shit where they were doing those collateralized debt and loan obligations, and the whole house of cards they built, and a whole derivatives crap. Well, all right, getting back. So this rehypothecation, reserves described in a paragraph may not be pledged, rehypothecated, or reused except for the purpose of creating liquidity. Okay, creating liquidity. Well, what does that mean? That means making the market move up and down so people can make money off of money, and make money off the working class in their ignorance or their bad situations. Creating liquidity to meet reasonable expectations of requests to redeem payment stablecoins, such that reserves in the form of treasury bills may be pledged as collateral for repurchase agreements with the maturity of 90 days provided. What are we reading here? Stablecoins, reserves in the form of Treasury Bills. We're going to have to get clarification on this. Why are they tying? I don't understand yet. I'm trying to read this shit we're reading this at the same time, people. What are they doing here? What are they trying to do here? You know, they write this legalese shit on purpose to like try and confuse people as to what their true intention is so they can bring this shit in front of courts. And I apologize for my cursing. I know I should be more ladylike, but you know, I've worked in tech and I've worked around guys all my life, so it's just a bad habit. But it's frustrating to see this happening. I got lost again. The permitted payment stablecoin issuer receives the prior approval of the primary federal and state payment stablecoin regulators. Told you, I knew they were going to regulate this shit. Monthly certifications, examination of reports by registered public accounting firms. In general, a permitted payment stablecoin issuer shall each month have the information to close in the previous months. So basically, you're saying you need to, if you have your own stocks and you don't manage your own accounts, you know that financial companies, like stocks, and they have to, and ETFs and all those financial vehicles, they all had to produce, they're all bound by law to produce a monthly or quarterly or yearly statement of what they're doing and how they're doing financially. So this is what I kind of see what they're doing here. So they're basically requiring a sort of disclosure to keep people honest. But with this administration, honesty, their tongue burn out if they dare say the honest word. Certification. Each month is CEO permitted. The CEO or CFO of a permitted payment stablecoin issuer shall submit a certification to the accuracy of the monthly report. Well, what are we talking about? Are we talking about the exchange of money? How much money, like dollars, they have? How much crypto they have? How many machines they're running to do all right. Criminal penalty. Any person who submits a certification required under paragraph B, knowing that such certification is false, shall be subject to criminal penalty set forth under section da-da-da-da-da. So basically, they're going to weaponize the government to come after one. They're going to weaponize the government to come after anyone they don't like or they don't approve who is using cryptocurrency. And we've seen what this administration has been doing with cryptocurrency and its shady shit that it's doing overseas with what was it, Pakistan, and then that Arab country, I can't remember, Bahrain or Saudi Arabia or one of them. Give me a break. Capital liquidity and risk management requirements. In general, the primary federal shall jointly, and in the case of the state, qualified payment stablecoin issuer, the state payment stablecoin shall issue capital requirements. So, okay, they're going to require capital requirements for stablecoin issuers. So anyone who's mining their coin has to be approved. Is that what I'm reading? And you have to put up money. You have to put up, what are they saying here? You have to hold so many cryptos of your own crypto you've mined. Appropriate liquidity. Appropriate liquidity. So that means you can pull it out, or there's enough liquidity so you can do in and out with the coins. Good Lord. I'm going to let you read this and give my voice a break here. Appropriate operational compliance and risk management standards. Oh, so they want to talk about risk management when we had that 2007-2008 crisis when what? The government deregulated? Well, what was it, Glass-Steagall? They got rid of the Glass-Steagall Act so banks could become both what? Investment and regular banks? And what did that land us? And so they're talking here about regulation. Yeah, but what's that saying? Who guards the guards? Then the fox is guarding the henhouse. they're setting this up to do whatever the hell they want and play by their rules and their definitions of who can do crypto. Rules of construction. Nothing in this paragraph shall be construed to limit the authority of the primary federal regulators or tailor different issues taking into consideration capital structure, riskiness, the supervisory regulatory enforcement authority of appropriate federal rules, standards. Treatment under the Bank Secrecy Act. A permitted payment stablecoin issuer shall be treated as a financial, there you go, boom. Treatment under the Bank Secrecy Act. A permitted payment stablecoin issuer shall be treated as a financial institution for purposes of the Bank Secrecy Act. And remember when we first started this, the Bank Secrecy Act referred to this, record keeping, blockchain, and it referred to congressional findings of purpose of banks and record keeping, monetary transactions. That was from back at the top up here when we first started the Bank Secrecy Act. Back up here. I'm going to find it so you can see if I can find my place. Yeah, right here. So we've been reading through all this just as you have, I have. So let me get this straight. Anyone, the big picture here is if you want to use crypto, you have to be registered and overseen by the government. And if you want to spin up your own crypto system, well, do you have to become a quote unquote permitted payment stablecoin issuer? Or are you going to be allowed to independently operate your own crypto system? That's a big question. And from what this reads, they're going to say that a permitted payment stable issuer shall be treated as a financial institution for a purpose of the Bank Secrecy Act. Well, guess what? They have laws saying that you can't print your own Federal Reserve notes because it's counterfeiting. So guess what? What does this open us up to in the crypto space? If you want to have your own crypto system, does that mean if you start your own crypto thing, not that I'm advocating for it, but are you going to be later on down the road when the Trump regime starts cracking down on this more and more, that anyone who makes their own crypto system is now considered a counterfeit? Are they going to make it so that you have to become a stablecoin, a permitted payment issuer just to do it? Are they going to shut independent crypto miners down and people who are building their own breakaway crypto systems because they're going to use it as a bank act and they're going to tie it to national security? Why do you think Palantir, why do you think the tech bros have gotten behind Trump? Limitation on stablecoin activities. A permitted payment stablecoin issuer may only issue payment stablecoins, redeem payment stablecoins, manage related reserves, including purchasing and holding and reserve assets. Now, I want to know what they're talking about, what these reserve assets are. I may have looked it over in my ranting reading, but again, what is this? Is this tangible money? Is this silver? Is this gold? Is this the hardware, the infrastructure of an exchange or of a crypto mining company or a private crypto person with their measly 2 graphics cards? Provide custodial or safekeeping services for stable coins. Provide custodial safekeeping service of payment stablecoins require reserves or private keys. And here, yeah, this is it. This is another reason why crypto is dead. Private keys. If they know your private key, they can backtrack everything you've done on the blockchain. Private keys is a whole damn purpose. It's crucial to the whole cryptocurrency concept. And if the government knows your private keys, and if the government mandates you have to give us your private keys if you want to operate, you've just violated your client's anonymity. You've just compromised your client's security. And if you run your own system, you have to give up your private keys. I mean, I don't know yet, but the government can mandate this. I'm telling you, this is it. Crypto's dead. Undertake other functions that directly support the working, issuing, and redeeming of payment stablecoins. Rule of construction. Nothing in subparagraph A shall prevent a permitted stablecoin issuer from engaging in non-stablecoin activities or explicitly allowed by the relevant regulator. So they want to regulate crypto. This is it. Crypto's dead. Crypto's dead. Regulation by the Comptroller. And if you don't know what a Comptroller is, they're basically, let me do a quick Google search to help educate. Comptroller. A Comptroller is a management level position responsible for supervising the quality of accounting and financial reporting of an organization. And if you know anything, states have their own comptrollers, and it's basically, this is going to be a federal comptroller. A federal qualified non-bank payment stablecoin issuer shall be regulated and supervised exclusively by the comptroller. Okay, let's look. Comptroller of the United States. Eugene Lois Dodardo, the current Comptroller General. So, Comptroller of the General United States. So, you know, you need to do your research on this, but Comptroller. General Accounting Office. So that basically regulated by the Comptroller. Regulation of federal qualified non-bank payment stablecoin issues. The Comptroller of the currency shall, in coordination with other relevant regulators, issuers, such as regulation and orders as necessary to ensure the safety and soundness of any non-bank entity approved by the Comptroller to issue payments stablecoins. Okay. What does this mean? In coordination with other relevant regulators. Okay, just keep that in mind. Does that mean the FBI? Like, can they just wordsmith whatever they want the hell, and the CIA and the FBI, whoever the hell they want? God forbid if they want to use it, the denuded SEC to do this crap. State level regulatory regimes. How nice regime. Love that they're outing themselves. Option for state level regulatory regime. Notwithstanding the Federal Reserve required framework establishes under subsection stabilization code user with a total market capitalization. Okay. Look at that. Stablecoin issuer with total marketization capitalization of not more than 10. How many zeros is that? That's a million. 10 billion. Okay, we're talking big money here. So basically we're getting into state regulators shall review state regulatory regimes. So you have to certify. Certification. We're just going into some certification crap. This is talking, I think it's just reading it real quickly. Look, I'm reading this through with you. So we're going to have to look at this together and make an open dialogue about what the hell they're doing. Appellate review, payment stablecoin issuer may challenge a determination list. The Secretary of the Treasury shall publish and maintain in the Federal Register and on the website of the Department of Treasury a list of the states that have submitted initial certifications. Okay, that's just talking about state. Transition to federal regulations. Transition to federal regulations. Depository institution, a state regulatory. So what are they implying here? That also states, like I mentioned before, states can now issue their own crypto? Okay, I'm gonna I'm not seeing anything really kind of we can talk about here. It's just more gibberish here. Approval of subsidiaries of insured depository institutions and federal qualified non-bank issue payment stablecoin issuers. Application. The primary federal payment stablecoin regulator shall receive, review, and approve applications from any insured depository institution that seeks to issue payment stablecoins. Okay, so we're talking about any insured, it's like FDIC issured banks. Okay, so are banks going to start issuing their own crypto now? Goodness. This is so stupid. we're putting ourselves into an idiocracy, a blockchain UBI idiocracy dystopian nightmare. Oh, goodness. Mandatory approval processor. Upon receipt of a complete application. Evaluation. Okay, mandatory approval process. The primary federal payment stablecoin regulator shall, upon receipt of a complete application, evaluate and make a determination on the application based on the criteria in the Act. So you got to get approval. You have to be evaluated. So you have to get it evaluated. Factors to be considered. Factors described in this subsection are the ability of applicants, or in this case, of an applicant that has insured deposit, basis on the financial condition and the resources to meet the requirements set forth in section 4. Okay, so they want to make sure you can back your shit up if you run a crypto scheme. Denial of application. The primary federal payment stablecoin regulator shall only deny a complete application received if the regulators determine that activities of the applicant would be unsafe or unsound based on the factors. Well, guess what? What was the whole crypto coin with Trump? Was that safe? Was that sound? Would Trump's own bullshit coin be approved under this crap? Of course not, but under his regime, yeah, my Trump coin is the best coin. It's the number coin. There's no coin like mine. This is stupid. If you can't say this, you're not looking. You're not awake. Explanation, you got to give an explanation. Yeah, this is probably looking into like denial, getting an explanation, pleading your case if you're denied. And then they're just going to say failure to render a decision. If the federal payment stablecoin regulator doesn't do a payment, so if they don't render a reason why they denied your thing, then you can get approved. So if you play the delay game and got that kind of money, just like Trump is doing with all, legal warfare, maybe you can get away with it. Supervision and enforcement with respect to subsidiaries of insured depository institutions and comptroller regulations. God, this is... All right. Each permitted payment stablecoin issuer is a subsidiary of a... Each permitted payment stable issuer that is a subsidiary of an insured depository institution shall be subjected to the supervision by the primary federal payment stablecoin regulator in the same manner as such as insured depository institutions. And they're quoting the Graham-Leach-Bibley Act, I don't know. So this is getting into regulations, it looks like. The comptroller may make examinations of a comptroller regulated entity, the nature and operations of financial conditions, financial operation and risks within the comptroller regulated entity pose a threat to the safety and soundness of the comptroller, the stability and financial system of the United States. Well, have we not seen what crypto has done to like millions of people draining their money and what the Trump crypto scam is? This is so stupid. Trump is scamming people with crypto, and now he wants to put in means to regulate it and prevent consumer fraud? No. We know what this is. If you have any two brain cells, you know what's going to happen with this. Oh, here we go. Efficiency. Oh, you know how Doge was. Department of Government Efficiency. Goodness gracious. I'm kind of getting a little winded here, and I need to get a sip of coffee. Suspension, revocation, cease and desist of the primary federal payment stablecoin regulator has a reasonable cause to believe that a permitted payment stablecoin issuer or any institution affiliate party of the permitted stablecoin issuer has violated, or is attempting to violate this act. Any regulation order is issued on this act, or federal cease and desist. Basically, all that bullshit here is saying, like, if they don't like what you're doing, we're shutting you down. And don't think that they can't. Well, they can try, but just removal and prohibition of authority, procedures. Maybe this is more just legalese, procedural crap. Here we go, civil monetary penalties. Here's where they say failure to be approved. Any person who issues a United States dollar denominated payment stablecoin. Okay, here's a key. United States dollar denominated payment stablecoin. Again, I'm going, and all this legalese shit and all this legal twisting, and judges and lawyers and prosecutors and defense, they can twist this shit any way they want. So they're going to say anyone who has a crypto mining scheme in their garage, just because they're not registered, well, since the only thing they can convert it to is a dollar, well, they're considered a non-registered, non-approved stablecoin, even though it has nothing, even though they may be backing their coin by silver or their gold or their own personal coin with like wheat, bales of hay, or head of cattle. Maybe that's the reserve. You know, who knows what they're gonna, what this regime is going to do. But what I'm getting at, 100,000 a day. If they don't like what you're doing, shall be liable for a civil penalty of not more than $100,000 a day. Who, with their 2 or 3 graphics cards out there in their garage or their basement or their closet, mining a few thousandths of a crypto, who can afford, if the government comes after them, to pay a $100,000 or $10,000 fine because the government doesn't like that you're making your own crypto? Yeah, I know it says right here, with a dollar-denominated payment stablecoin who is not a permitted payment stablecoin issuer. Again, think, people. They can say anyone who's doing crypto is a non-permitted payment, and they can come after you. Crypto's dead. First tier. Second tier. This is getting a bit much. I know this is a long video, but it's an important video. If you've done crypto, if you're interested in crypto, you'll see why I've been saying crypto is dead, why it's a failed experiment. Any penalty imposed may be collected by the primary stablecoin regulator percent. Another weaponized arm of the US, I take that back. Another weaponized arm of the Trump regime. Except I have to leave reading this more, but I'm just wanting to get this out there as soon as possible so people know, read this shit for themselves. You know, I'm just here as a yodeler yelling out, like, listen, look, pay attention. State qualified payments, state payment. Okay, this is getting into state again. Now this is getting a little long, and this is more and more procedural crap, it looks like. Comptroller, but I'm probably, you see, this is what they're guiding it. This, like they said, the Patriot Act was, oh, this is for your protection. And guess what? We went from metal detectors to body scanners to facial scanning just to go travel. We've gone from, you know, metadata to all-out tracking with like PRISM, what Snowden did, and blowing the cover on all that NSA shit that they were doing, which if you didn't think the government was spying on you, you've got another thing coming. But here they're guiding it, oh, we're going to protect customers. Well, hey, Trump, how about all the people you've screwed over with your Trump coin? You freaking hypocrite. A person may only exchange in the business of providing custodial safekeeping services for permitted stablecoins or private keys. Again, private keys. If you know about encryption, keys are everything. If they know your private key, their public key is out there, they can decrypt anything and everything. You know, speaking from on a broad terms of encryption, they can decrypt all your data. They can they can get into all your systems. And the same thing with cryptocurrency. If they have your private keys, they can go back in and look at everything you've done on the blockchain. Yeah, like in here, you know, if you look back here and if you read through Nakamoto's stuff here, he's talking about, I can't remember where it was, but basically Nakamoto said it would be inefficient to try and double spend, like going back and trying to rehash or unhash and go back and redo the blockchain. But if you have a private key, that makes that kind of situation easier. We can go through but still that would take a huge amount of computing power. But that's crucial. Does this bill, this is only the front end of this bill. I mean, this is the start of it. You know, they can expand upon this, and later on down the road they can say, well, if you want to become a stablecoin, a permitted stablecoin person, you have to give us all of your public, or sorry, you have to give us all your private keys to all your clients. Do you see where this is going? Good Lord, this is stupid. I know this is getting to be a long video, so treatment of insolvent payable stablecoin issuers. So Trump is going to say, he's going to get out there and say, oh, look what I did. I'm the crypto king. I'm the one who put in cryptocurrency. Oh, I'm the best. I'm the one who did, I did this and I did that. Crypto, it's all because of me. Crypto, crypto, crypto. And all, you know, the people, all his uninformed people, all the uninformed MAGA out there, and I hate to say, all the uninformed left and crypto bros and crypto sisters who are doing this crypto shit, they're not reading this shit. They're not going through all this and realizing what's happened. They're only going to know what the media tells them and what some podcaster or influencer says. They don't get the minutiae like I'm doing here, reading this shit, exposing what's going on here. Authority of banking institutions. Nothing in this act making authority of banking institutions. You know, as a lay person, trying to read all of this shit, trying to read all this stuff, you know, there's a reason why the law is so, the vernacular is so weird and twisted the way it is, because they make it intentionally hard to understand and try and figure out what you're doing. You know, you got to spend, you know, it's like engineering or computers or whatever skilled labor you do. You got to learn a whole vernacular. But this whole legalese shit is to protect the 1%, and it's to protect the people in power. And they built a whole damn ecosystem with judges and courts and prosecutors and bailiffs, and it's a whole money-making scam on the side of quote-unquote justice. But I'm digressing a little bit, but just reading this for the first time through, you know, we got to go through and digest this. We got to talk about this, because you know, all you crypto bros and crypto sisters out there who are just going to listen to what the bro podcasters and cis podcasters and these people who don't understand the technology and what the whole thing was about, you're going to get deceived, and you're like, oh, I don't care, just so long as crypto's making me money in my crypto account. You idiots. You people are just going to lie. I'm telling you, I know I sound like a conspiracy theorist, but look where things are going. They want blockchain. This regime wants blockchain because it makes you more manageable. Big tech needs cryptocurrency because they need to make servers. They need to make microchips. They need to build out data centers because big tech needs to keep making money. And what a better way for them to keep spitting out hardware and spitting out microchips and keeping wafer fabs going is to blockchain the whole G-damn world, so that they need data centers everywhere sucking up water, sucking up energy, just so they can monitor your transactions and put it on a blockchain. And I keep telling over and over and over again, when technological unemployment destroys the working class and people have no means of the legacy dollar, they have no means to survive with legacy jobs, when jobs are gone because of robotics and automated kiosks and artificial intelligence, they're going to need, they being the 1% and whatever authoritarian regime is in charge, they're going to need a way to keep you angry, miserable, resentful people under control. Now, if you've stuck with me till the end, thank you very much. But once again, I've been saying cryptocurrency is dead, and this whole Genius Act, this is the death of cryptocurrency. And I'd be glad to entertain comments and your feedback and ideas on the whole matter in the comments, or what is it called? Not retaliation, but rebuttal videos. Let's talk about this. we need to talk about it. And with that, this is Shauna with Disrupt Apps LLC, and I look forward to more content in the future. Bye-bye.